As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, and welcome back to my channel. As some of you might have noticed, I'm a big fan of AppHarvest. To be honest, before I got to know AppHarvest, I never really believed in vertical farming. But the way that AppHarvest has handled it, large scale with AI robots, I'm a really big fan. And of course, we all have seen the stock price. It's been tumbling down. It's 92% down from its all-time high. Nobody is liking that. The pain we're feeling is real. And especially recently, I came across this article: 7 worst facts for smart investors to skip in 2022. Oh my god, and what name is mentioned there? AppHarvest as a very first. So that's pretty terrible. So did I make a mistake? Is that an investment that's maybe worth just passing by on an investment? So I had a quick look at the article. It seems like the author hasn't really done much research. He just wrote it quickly with some numbers that are available everywhere. So what are we seeing? Oh shit, our AppHarvest, it's losing 70 million, and it only has sales of 8 million. Well, firstly, he's wrong about this number. We are losing a lot more than 70 million. So it's in 2021, I think it's around even 200 million for sales of 8 million. So that's a lot more. And the 70 million, the number that he's referring to, I think he's referring to Q3. But also this money is being spent to build farms. So it's really normal, and once the farms come online, this number will drop very sharply, but I will come back to that. He's also saying that there's a credit line that's going to come open, a line of 100 million of new equity. At current share price, that would result in a massive amount of dilution. So what the article writer, let's see what his name is, Ian. So what Ian doesn't seem to know is that the amount of shares, as far as I read it, the amount of shares that will be added is 20 million. We currently have 100 million outstanding shares. So the max dilution would be 20% over a period of 2 years. Now, that's not little. And it's actually not sure that they will do this dilution. To be honest, at the current share price, I don't think they will do it. I think if they did it, I don't think they would do it in 2022. And why? The share price is very low, and they just don't need the money right now. I think they're counting on that the bringing online of the next farms will actually boost their shares, and at that point they could do that dilution, but probably not before. So let's have a look at the current AppHarvest finances. So guys, this is the current situation, at least a little bit what I expect for Q2 2021. It could be 1 or 2 million off. But basically in Q3 they had 221 million in cash. I expect that in Q4 they have 17.5 million expenses. They have 10 million of short-term debt that has to be paid. I'm not sure by when, but I'm expecting it somewhere between now and in the next 9 months. So that's why I already subtracted it, giving a 193.5 million cash. So that's not bad. Debt 85 million long term. Long term means longer than a year. And I think they have a little bit detailed on what kind of debt that is, but let's get back to that later. Then assets 604 million, so that's quite large. So we have a considerably much more assets than debt. So that's always positive, and that will make it very difficult for the company to go bankrupt, basically. And then you have a market cap of 340 million. So again, a lot smaller than the asset price. and a revenue of 11 million that we would expect to have in 2021. Might be 9 million, might be 10 million. So we'll know that for exactly in Q4 earnings call. But yeah, I think we'll not be that far off. So now we want them to get profitable, of course. For AppHarvest to get profitable, they need 212 million to be profitable by 2025. So end of 2025 to get some profit, and maybe a little bit sooner. But yeah, I'm targeting end of 2025. And for that, they have foreseen, of course, they have their cash. We know that they have cash. And they also have credit lines. So there's one short term. I'm guessing when it runs out, they might extend it. I'm not sure. I think maybe they also have a bigger credit line than before, just in case they get some supply chain issues or they have inflation. And they have a second credit line, and I'm guessing this is what we saw in the long-term debt balance sheet, namely 75 million, and it's payable in 20 years. So that's quite well. That's I like to see those 20 years loans at this point. And then we all know, as we saw before, we might get a 20% dilution at the current stock price. That would bring them 68 million. And if the stock price goes up, they can get a maximum of 100 million. So not including the short-term credit line, that means they have 124 million to spare to get profitable. So even if some things are going wrong, then they still have a war chest of 124 million. And of course, we saw that they have 600 million of assets, so it would be possible for them to open extra credit lines. So I'm not really concerned unless we see a huge failure of the tech. But I think that's going to be reaffirmed in Q1 this year in the earnings. I'll come back to that later. But from what I'm seeing so far, I trust the tech. So that's what I believe. Everyone needs to decide for themselves. But I believe that their tech is going to be fine. Yeah, I think the 124 million might be used for extra investments because they're aiming to 9 to 12 farms right now. And maybe, of course, after 2025, they want to keep building farms. We'll see. So the value by 2025 at the current sale price, they would have 38 million of profit per year. Oops, small mistake here. 38 million profit per year, a price over earnings of 8.9, 360 million of sales, so that's more than the current market cap, so a price over sales of 0.95, and of course a sales growth of 3,100%. That's, yeah, those are dazzling sales growth numbers. Now that is all if the current stock price would remain the same, but of course with these numbers it's not going to stay the same. I have three cases. I have a bear case. In my bear case, I would say the market is not happy at all. We're in some kind of a crisis, a little bit like we're seeing now. And we would only accept, the market will only accept the price over earnings of 25 and price over sales of 2 to 3. So in that case, even including dilution, I would come to a share price of 7.6. By the end of 2025, which would still be a very nice growth compared to the current share price, by the way. In my mid case, I'm considering that they can keep up 20% growth even after 2025. And in that case, I'm accepting a price over sales of 5, a PE of 46.8, and a share price, well, it would give me a share price of 14.32, and I think this is probably, in my opinion, is the most realistic case. I think for a small company like AppHarvest, they would probably accept a PE of 46.8. The market would probably accept that. especially if it keeps growing fast. I do have a bull case, and that's in case that even after 2025, AppHarvest can keep up a 30% growth. In that case, price over sales ratio of 7.5, price over earnings of 70, also including 20% dilution, and then I can see a share price of 21.41. So we're currently in a very bad market, and I guess AppHarvest, not everyone can see through the finances that they have, and that article I showed you just proves it. Yeah, as you can see, assuming you believe that the technology will be successful, then I think that you will have very positive things because of the share price. Now, I do want to discuss the earnings coming up, because we'll have the Q4 earnings 9th of February, so it's very exciting. only a little bit more than a week from now. And what does that mean? So what am I going to watch at? Well, first I want to see the results of Q4 2021. So I want to see their comments on technology and their root AI. I think it's called their robot. How's it doing? I also am interested in the finances. How does the inflation, the rise of energy prices affect their harvest price? And are they also able to raise their prices along with that inflation? So that's going to be important for me as well. And then the guidance, I'm also going to look at the guidance. I would like them to reconfirm their timelines for the farms coming in this year. And I'm also interested to see if they have any supply chain issues. In Q3 earnings, they said they're managing it day to day, but they're not really seeing an effect. I'm also looking at companies, supply chain issues of other companies. What do we see? A lot of companies are reporting supply chain issues, but we also have Apple saying that they are seeing less supply chain issues than they saw before. So I'm hoping to see something similar for AppHarvest, but that's really a guess right now. I have no idea what they're going to say about that. So yeah, that could affect on the short term the share price, all these items. But on the long term, I believe it's going to go to a very, very nice share price. Guys, thank you so much for watching. If you like this video, please like, please subscribe, and see you next time. As always, guys, this is just for entertainment purposes only. This is not financial advice.